Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, Anthony here. I had a video the other day, yesterday in fact, I think it was. It was this one, NAS 100. If we go into my ideas here, March 27th. This video here I talked about this opportunity, and what I was saying was we could see this spike up into buy-side liquidity attacking stops, and we get a short out of it. And we looked at this break of market structure, possible reversal shaping up. So what I want to do with the video today is give you my thoughts on where we're currently trading, and we'll have a look at an opportunity. So I'll just open up this daily chart over here, and let's just do that quickly. We'll do a really quick top down, doesn't need to take much time, but it's important that we go out to the weekly and we mark up a few things here. The first thing I want to mark up is the weekly open, and how are we trading in relation to the weekly open. All right, so this is the weekly, here's our open here, mark that. Level weekly open, and what you might notice with this, in fact, we'll just go down to the daily and have a look and see what happened with this. That's Monday, previously was Friday, so there's our weekly open right here. Notice how we traded up. This attacks buy-side liquidity, and now we're trading under the weekly open. And my thoughts on this is this setting up now for a bearish opportunity for the entire week? Now we've got this pullback up into resistance here. So let's just have a look at this, and we'll talk about what's possible here. So we'll go back to the weekly. We have this weekly open, so it's important to notice how price is trading in relation to this, especially early in the week when it attacks liquidity on the other side of it, and then it trades under. And now if it holds as resistance and we trade south, then early in the week, yesterday for example, we could have jumped on board and been in for quite a nice outcome for the week, right? A couple of things about this: we've taken out buy-side liquidity up above here. Now we've traded back up. We're going to mark up key levels. So we've got this level through here. If we have a look at this high, go back, this low, this high, this low. This is a big level. In fact, I might just do that. So we know that thin line is a weekly level going back, and then it opened exactly at that level. Interesting how the markets do that. So there's our weekly, and as far as support goes, well, we've got we can pull these levels through. I'll just take this candle close, candle body open here, weekly support. So we'll just mark that up, W, and then this will make a lot of sense, level weekly, when we go down the time frames. All right, so we've got this range in here. It's currently trading down onto a weekly support level, so that will make sense as we head further down the charts here into the lower time frame. Now the daily, same thing. Current prices here. If we look left, we can see these multiple touches through here. Candle body close, open, daily level, resistance, daily actually support at this level, and we can just take this high here, coincides with these levels through here, all through here. So this is a big daily level, and this will make a lot of sense on the lower time frame. So always mark these up just around where the price is currently trading. So from here, what's a big level as far as looking at the trend and key? Like we've got this green candle here. That's a big level on the daily distribution level, so we'll mark that up, and then we'll do the same on the 4H, and then we'll have a bit of a roadmap. So we've got this distribution, we have, well, we could come back, this accumulation through here on the daily. I'll mark it up on the 4 hour, I think, to see what that looks like on the lower time frame. Okay, so that's clear. And then we do the same thing with the 4H, and a couple of things we want to notice here. Now, we've got a bearish trend setting up here. We've got these lower highs, lower lows. We've had this pullback, and I mean, you can grab a fib if you like. So now we've got this bearish trend on the 4H. We pull our fib, and we've got a pullback into this yellow zone here, the 61.8 to 786 is an ideal entry with the trend bearish. This is a little bit early, and I'm wondering where we see a little bit more upside. On the 4H, I'm going to mark up this green candle prior to this strong impulsive move south. All right, this is how I go about setting up my trades, basically. Just do this very quick top down, marking up these important levels. So there's a 4-hour distribution. We've got trades down. We've got this, and then of course it traded down further here. So we've got, I'll just grab this candle body, pull that through as a level of interest here in terms of support. So that's definitely, as it coincides with the weekly and the daily level here. So that's a port of call. So I'll just mark that up 4H. So now we've got this range between these two levels. The other thing that we have here that's important is, see this thin candle. If we pick up the low on the candle left and the high on the candle right, 4-hour imbalance. The market's looking for two things. It's looking to rebalance. In other words, it'll trade through these price gaps, and it's looking for liquidity. So we've got this imbalance here. We've got this 4-hour distribution, daily 4-hour combo. Now this is a key level. So I'm going to plan my trade around this, and it's going to be possibly a short opportunity. What else have we got here? We've got, oh, that'll do for now. Well, we've got this imbalance under here as well. All right, so we could mark that up. So this thin candle here, 4H, to the base of the current candle, 4-hour imbalance. Hope you're following this. It's not difficult. Main thing is the key levels of support and resistance, distribution, accumulation, and price gaps. That's it. And the daily. That's all I've done here. Now I've got a bit of a roadmap. So we're kind of in no man's, trading in no man's land here. I would like to see an opportunity if this trades back up. Now this is bearish on the 4H, lower lows, lower highs. So I'm inclined to look for a short opportunity. And the way that I would approach it would be, look, if you want to get your feet wet, having a look left, you can see that this is at a level here, multiple touches, right? So we could reject right here. So you could go in here with a market sell, for example, a small position. So I'll just call that sell market, 0.2% of my account. That's how I kind of do this. And then at least, I've got my feet wet here. If this rolls over, well and good, I'm in and everything's, it's a happy day. If it happens to trade further north, that's fine. This is only a small position. I'm going to look to set up this price gap. I'll go through this gap to the high, and under this 4-hour order block, I'll set up another sell, a limit order here, and that'll be 0.4, and that's going to be at this level. And this is really specific. Stop loss will go, we want to manage our risk. We've got this 4-hour order block, daily order block. I might just go slightly above the high stop loss. Target 1 is going to be through this price gap above this weekly level. So all I'm doing is looking for my 4-hour weekly and daily levels. So I'll go T1 around here, generally take most of my position off. And then of course T2, look left and see where you see clusters or obvious levels. You've got this 4-hour order block here. So what about halfway through the order block, something like that, T2? That kind of makes sense. So if we take a portion of our position here, we might trail the rest, and then I'll look to go for broke. There's a level back down in through here, these highs, this balance area here. So there's a target, maybe at the high here of this T3. By the way, guys, have a look at the links below and join my free Telegram group. And the other link there, We Trade Your Forex account. Check that out. You might be surprised at the results we're getting. You'll be able to connect your Forex account to mine, and it copies the trades over automatically. That's available. So this is a bit of a plan here. Where's the next level? Have a look at this cluster down here, this red candle here. So that coincides with these lows. Red candle slightly above this here, there's T4. So there's a plan, a trading plan. The strategy is it's trend continuation. We're going with the pullback, the retrace, key levels, And what I'm going to do as well, we're going to go down to the lower time frame, and I want to show you something really special. Trend continuation 4/8, we've got the pull back into 61.8786 fib zone. So this is my sell zone through here. In fact, if you want to be more precise with this, we could grab that, pull it down slightly under the 786. Why not? So that's the plan. Looks good to me. Look, can this go wrong, and we get taken out? Absolutely. I mean, smart money could decide that they want to push this north and go for broke. Well, great. I mean, the thing is, though, once you've got a strategy that gives you results, it's a matter of just being mechanical with it, and you build your account. That's all there is to it. You lose a couple here and there, and it doesn't matter. All right, so what I want to do now is I want to show you an easy way to navigate the volatility. Go down to this chart here. As I mentioned, check out the links below. You can gain access to my indicators, right? So let's just have a look and see what we've got here. I'll show you what we're doing. So what we've got is these signals here, that one, this dot. And what I'm looking for with this is if we get a combo of this red bar, and see under here, this is our multi-time frame, higher time frame indicator. I'm good with that. This is a 5-minute chart. So there's trade. Come in on the pullback and look at the outcome. That was quite nice. Same thing again now here. This is riskier, right? Not all the check boxes are ticked. We've got the red dot. We've got this bar. This bar here, it tells us that the 4-hour and the daily have come together to meet a certain criteria, and the momentum is strong bearish. But the higher time frame here is giving us a predominantly green, so it's a bit more risky. You really want to see red here and red across the board there with a red dot, and what that red dot is giving us a stop run. Then we take that trade. We've got a green opportunity. Now this is where it works really well. We've got a green bar under. It's not quite running under the current price, but we've got the green dot, and our multi-time frame HTF is green. That's your opportunity, and you can see the outcome. Anyway, I won't explain the same thing again, but we can take these signals as well. That's a buy opportunity. I'm only looking for green opportunities, not red. So we disregard the red signals here. See how everything's predominantly green under here? Well, look at these trades. Look at that. Anyway, guys, you can gain access. Look at these signals. So what I've done, I like these dots because the dots will give you extreme price movement. In other words, a stop run. And you can see over here, if we go into, look at these opportunities. These are these dots telling us that price is extended. And then all we need to see with that is that these two other indicators line up, and then we got the opportunity. So, yep, click the links below, join Telegram, We Trade Your account, have a look at that, jump on board, contact me, grab the indicators. Hope you have a great day, safe trading, and we'll see you in the next video.